Hey traders, welcome to Charts and Coffee. Hope everyone is having a good morning. We've got some data to talk about as we kick off the morning, and that means we're looking at the aftermath of the ADP non-farm payroll, their version of non-farm payroll, if you will. It's now the countdown, obviously, to Friday's big jobs number. We had preliminary GDP. So let's talk about good news is bad news, or is bad news good news, and all that good stuff. Yesterday, we got a really great reminder about two things, didn't we? For example, in the Sector Secrets Mastery, we focus solely on the long side because the market structure, which of course dictates the strategy, was as we like to say, green, right? We have a color-coded approach. Many of you are familiar with it, the multi-trend. The multi-trend said it's green, it's long only. So that was the first thing that kept us from trying to top pick. The second thing was 10 a.m. jolts. If we understand the rate of change of certain macroeconomic factors, all right, then that is not macroeconomics is not just sort of this big picture, broad definition of whatever we think is important that day, right? It's not. It's really simple. It's really simple. Jobs, inflation, growth. Really more emphasis on inflation and jobs. Growth is a distant third. Anything like jolts that would suggest that there's a slowdown in the employment hiring, more firings, more initial claims, right? Fewer new jobs. Those are all going to be bad news. Anything that suggests the employment is struggling, that's going to be bad news, right? Okay. With that in mind, if we have quote unquote bad news, then what we want to remember is that equities are going to rally, right? Wait a minute, Rog. If an employment picture looks worse, equities are going to rally? Yes. That's because it then suggests the Federal Reserve should not be as hawkish as maybe we fear or have discounted. That's why we rallied. Bad news? Good, right? Okay. Ultimately, this week is going to be relentless, right? This is going to be absolutely awesome for a short-term time frame. Well, let's get into the charts a little bit, shall we? Why is this really working so well right now? And why is it something that's going to keep working? Why is this a gear we need to be able to shift into? So let me walk you all through what's happening right now. And I'm going to take you on over to my charts. Where are they? There we go. This is the daily time frame of let's pull up the S&P here. The daily time frame of the S&P. And if I'm looking at the daily time frame of the S&P, what I have, let's take a look here. Dark red candle colors are down days, right? So I love color-coded candles, but I have two shades of each because a lighter shade is an up close, a darker shade is a down close. All right. Up close, down close. Up close, up close, up close. Take a look here. Down close. Kind of unchanged, right? If I look at these time frames, the daily time frame, every single day, look at these candles. Is there really great follow through? Not on the daily, right? So the daily is telling me, hey, things are very volatile, but not organized. When you see candles like this on the daily, kind of move the daily out of the way, thank the daily for, the clarity of the difficulty of follow through we're getting, and jump on over to your preferred short-term time frame. This is the environment where day trading is going to be great. Up one day, down the next. How do you take overnight exposure? It's very difficult. It's very risky. It's going to be low return. It's going to be low consistency. Instead, if you start every morning with just a flat, open book, right? And say, what am I dealing with today, right? Today trading. What am I dealing with today? Every single day, we're very likely to see the back and forth shift in sentiment. So that's why it's been so important to have this gear. And that's going to be exactly why I'll continue to persist with this gear. Another great example are bonds, right? Bonds are heading lower, lower, lower. And all of a sudden, we've got very little range from open to close. But look at the wicks, for example, in bonds on August 25. Someone looking overnight is going to say, we didn't move at all. Someone looking at a 5 minutes is going to say, oh my gosh, today we ran a marathon. There's so much movement that we had intraday. We're on daily time frame. It looks lifeless, right? That's the difference, gang. That's the difference. So those are things that we're going to continue to do. Time frame is going to make a huge difference. So let's go ahead and jump into some of the questions. As far as inflation goes on the data front, Andy, we'll have the PCE data coming out, ADP, obviously jobs, and then we'll have the PCE later this week, which to your point, that's going to be a big one. When we take a look at PCE data, remember, gang, that all the Federal Reserve models about their view of what's happening in the economy, therefore, how they're going to message and how they're going to monitor and ultimately act in terms of what they're going to do next with monetary policy is going to be more about PCE, not CPI, right? And by the way, Jerome Powell pretty much nullified what we have known for decades to be the definition of a recession. And a recession used to be those sequential two in a row, quarter over quarter, GDP negative, right? Not anymore. Not anymore. So you'll notice GDP doesn't have the same effect on the broader averages. But let's take a look together at why that intraday view is so important. At 8:30, there's your 8:30 candle. I've dropped my cursor over 8:30. What's happened since 8:30? Short-term time frame. We can absolutely dial into the first short-term candle of the response to those hot zones. 8:15 right here was your ADP. 8:30 was your GDP. Look, do you need to know what the number was? You really don't. It really, frankly, doesn't matter. But this is where bad news is good news. This is where being a day trader is going to offer us a lot of mobility. Is that less than what was expected? Is that quote unquote bad? It is. Is that bullish for equities? Yes, it also is. Why is it bullish for equities? Because it suggests that the Federal Reserve is going to have to come in with a more accommodative monetary policy, or on the other side of that coin, be less hawkish. Okay. So that's what we're dealing with here. By the way, if you're asking yourself, yeah, Rog, how do I take advantage of this? Because right now I am struggling with consistency. I am struggling with keeping my pipeline of trading opportunities full. I am struggling with overnight trades. One day I feel like a genius. The next day I'm thinking the market's out to get me. Believe me, I get it, right? That's why it's so important to have the gear to shift into with day trading. And it's not just day trading, gang. It's having an automated set of tools that will allow you to see where the zones are to make the decisions in day trading. So consistency for sure, but how do we get that consistency? That's tonight, simplertrading.com/consistent, not consistency. I keep typing in consistency. It's actually consistent. There we go. So /consistent. How do you get more consistent in your trading? Sometimes it's as simple a shift as looking at a different time frame with a different edge. We'll talk about all that tonight. All right, let's get back to the charts here. So I can see that the bond market has absolutely rallied in response to that bad data. What else is moving? I get a lot of questions about the US dollar. That is a frequent question that I get. US dollar bonds, these are much more tied to the macroeconomic picture than they would be what's going to happen with stocks. Dollar can rally, gang, and stocks can rally too. The bond market can rally and stocks can rally too. So please don't think the correlation is that consistent or high. We want to be aware of certain tipping points in terms of yields. In other words, at what point would the yield of a bond be competitive with dividend yields, right? It's not just the trend, it's that tipping point. So when I look at the euro, is a strong dollar inherently terrible for equities? No, gang, right? It's not. It just tells us that the dollar is spendier. It could be difficult for international corporations, but it's really more of a tipping point issue than it is necessarily the trend itself. So a lot of us are waiting to see, is the dollar going to move lower? We've had a lot of choppiness on the dollar. What's the best way to understand the dollar? Day trade the euro. Now, why the euro? This thing, as many of you know, I've been a Forex trader since late 1999. So I'm coming up on 23 years of watching the currencies through the foreign exchange. And what a lot of traders don't know, unless they start to trade Forex, is the way in which currencies behave with one another. The weighting that the euro has in the US dollar basket, because that's the way it really should be phrased. It's not, hey, what's going on with the dollar? It's what's going on with the dollar basket. 58%. You got 100 eggs in the basket, 58 of those eggs are euro. So whatever the euro's doing is going to be opposite of what the dollar's doing. So if the euro's heading higher, gang, the dollar's heading lower. If you want that simple view, pull up the 6E, right? What are we going to have this morning so far since 8:30? Since the GDP, what do we have in the euro? We actually have a weak dollar. So I get a lot of questions on that. That is a really easy and nearly 24-hour way to measure what's going on in the euro. And the euro does have an ETF. It's the FXE. And that's this. These are two great symbols to look at to get a really clear look at what's happening with the dollar. DX, remember, is euro, and then 5 other currencies that are sort of fairy dusted in: pound, yen, and then 3 more currencies that frankly nobody cares about because the weighting within the basket is so low, right? So that's what we're dealing with right now. And everything here, strength in equities, lower yields or strength in bonds, and strength in the euro or lower dollar are all indicating risk appetite, gang. And we can make these assessments this early into the day. And these are things that I do every morning. And we'll talk about this in the webinar. But these are things that you can get a pre-market edge. You know, what I'm walking you through is the basic process of my day trading. So when the bell rings, I'm already prepared. It doesn't take long to make some of these assessments and understand that these are just a couple of the dots we connect, right? Once you start the morning off having connected the dots, and then the indicators are going to be automated and they're going to tell you whether or not those dots really connecting is bullish or bearish or neutral. Again, that's where the confidence comes from. There's where the consistency comes from. So bullish euro, bullish bonds. This is all pre-market. And then let's jump on over to the NASDAQ. Bullish NAS, negative Ghost Rider. So remember, a lot of times we tend to want to trade what we like, not what is in the best form of an uptrend or a downtrend. Strengthen the indices? Nope. What about strengthen the Dow? Notice here, gang, right? Notice here. See that little edge? I'm right now, by the way, gang, I'm in full class mode. I'm in full webinar mode. I've got to communicate this to as many traders as I can. It is my duty because, again, as a trader, this is my office, gang. I'm trading from my home office. The way that I need to stay busy for myself, for my family, is where is the opportunity right now. That's day trading. So if I can show you all a little bit of what I'm doing before the bell rings, if this moves the needle in the least bit, I know that you're going to have a better shot, much better than the average day trader, to be able to do something that, frankly, thousands of traders can do and do, right? What's their secret? It's consistency. What's their secret? It's having a pre-market routine that gets them ready at the bell, not just sort of stretching their arms and drinking a little coffee at 9:30. You can file that under things losing day traders do, right? So if we can have a little bit of pre-market prep, automate everything, we've got an edge. What's an edge here? I know that the dollar's weak. I know that yields are down. I can see that the Dow is the first of the 3 major averages to start showing an uptrend. How do I know that? Again, everything's color coded, right? If granimals, y'all remember granimals growing up? I thought that was so cool. I could use that now, and I'm 52. Color coded, right? I knew if the 2 lions match, that I knew that's an okay outfit. If granimals were charts, that would be what I've got. How do you link things up? If this is this color, what do I do next? If this is here, it's automated. But I also want to, E-Mini Mom, how are you up at 4 a.m.? Wow. So I'll tell you what, E-Mini Mom, what I want to do is twofold. I want to simplify and shorten that time that you need. 4 a.m. That is amazing. Hey, that's amazing, E-Mini Mom. So in my mind, if I can shorten that pre-market edge to about 15 minutes, where you can walk in, say, give yourself 15 or 20 minutes before the bell, right? Make a nice cup of coffee. I made a little espresso today. do a little bit of this work that I'm talking about. Yeah, and then go into the bell. By the way, I'm going to be in the Sector Secrets Mastery room as well as the options room this morning. So we're going to take what we're doing right now here in Charts and Coffee, and then we're going to go right into the room and then look for opportunities. So right off the bat, I've shown you where two trends are. Let's take a look at crude oil together. Crude oil, not trending. What about gold? And remember, when we're looking at pre-market, gang, we have to look at futures. We can look at some of the pre-market stocks and ETFs, but if I get a look at what yields are doing, can't I trade TLT, the ETF alternative? If I know what GC is doing, doesn't that translate well then to GLD? If I know what's happening on the ES pre-market, right, doesn't that give me an advantage to SPY or SPX, right? Or even the E-minis and the micros, for those of you that want to stick with futures. Same thing. So these are all things that we'll get before the bell. And then what else do we want to take a look at? You know, I've been getting a lot of questions about silver and gold. I love that folks are looking at metals. Silver's heading up today. What about copper? Copper's oftentimes neglected. Copper is a really important metal, not because it's a precious metal, but because if copper and crude are rallying, it's very difficult to say that commodities are not optimistic about economic, I won't say expansion, but about economic strength, right? Because they're really the two canaries in the coal mine when it comes to commodities and economic optimism, right? Copper and crude are your two symbols for economic optimism. The best kinds of trends historically. So I'm not talking about what do we see last month, because frankly, who cares what we saw in July? It was a seasonally bullish month. I'm talking about going back decades, right? When there are really strong trends that are going to sustain in the indices, those two markets joining in is huge. It's huge, especially for the Dow and for the S&P. Yeah, you remember those? That's fantastic. All right. So great to see everyone. Let me see what other questions we have coming up. Sadiq asks, any wise words on staying in trades longer? Also, do I recommend trading with P&L visible? All right. So let's talk about staying in trades longer on multiple time frames. First of all, staying in trades longer means having a specific time frame that the trade is built upon and monitored based on. What do I mean by that? One of the things that traders do, and I did it for a long time too, if you would have joined me, this is 2023. Let's say you were with me in 1993, right? I started trading in 89. You're with me in 1993. You would have seen multiple time frames on my screen. Heck, if you were with me in say 2003, I was still looking at multiple time frames. One of the smartest ways to find setups and stick with them, Sadiq, is to stick with one time frame. So the job of the 5-minute time frame on my chart is for day trading. The job of the 1 hour, the job of the daily, the job of the weekly. Notice I'm not saying, oh, the weekly and the daily and the 1 hour are doing this, therefore I will do something on the 5. No, each time frame has its job. So that's kind of an unusual bit of advice because most traders want to confirm trades across multiple time frames. I do not. I haven't done that in over a decade now, well over a decade now. So first of all, no multiple time frame confirmation, no caring what the 30 is doing when you're trading the 5, because remember, if you're willing to go short and long to look at what's happening to a market, one of the worst things we do, Sadiq, and maybe this sounds familiar, is you end up looking at a 1-minute chart, 2-minute chart, 5-minute chart and going, oh my gosh, the trade's moving against me. When in reality, if you built it on a 1-hour chart, that thing might be steady. But because we're looking at a shorter, twitchier time frame, you're shaken out, right? The same thing goes the opposite way. If I'm day trading and I see that the 5-minute has structure, it doesn't matter what the other time frames are doing because I'm trading a very short slice of psychology. So stick with the time frame that set up the trade. That's number one. And then do I recommend trading with the P&L visible? I do not. I do not. So Sadiq, here's another thing. What we do, and probably the heart of what we do as traders, is position sizing and risk management, right? What that means is before we get into a trade, we should know our worst case scenario. I don't care about P&L because on a day like yesterday, if I put a cap on what I want to make, I probably would have left a lot of money on the table. If I have a preconceived notion of profit, that's going to hurt me. What we need to do is just manage the risk and let the profits take care of themselves. Or like a lot of football teams would think, put a good defense on the field and the offense will still be able to win the game for us. I look at it that way, right? So that's another way. So no, I don't care what the PNL is because I already know what the worst case scenario to my account is if the trade gets stopped out. And by the way, that's the side of the trade that messes us up the most. Yeah. We'll talk about all this tonight. So if you haven't already, gang, simpletrading.com/consistent. It's an important mindset, gang. So if nothing else, if you're saying, yeah, Rag, I don't have this day trading mindset, I'm lacking the consistency there. The webinar, if nothing else, it's going to move the needle for you. And you can put a lot of the ideas to work the very next day. So I'm super stoked. All right, gang, I'm going to see you all in the options room and in the Sector Secrets Mastery. Enjoy the rest of your day. I'll see you tomorrow, same time, same station. But before that, I'll see you tonight at 8. Be good to each other, gang.